Hello, good morning and welcome to my daily report market videos on Wednesday the 10th of July with me, Richard Perry, market analyst at Hantec Markets. Well, we're consolidating in front of this congressional testimony by Jerome Powell later on this afternoon at 3 o'clock UK time. Markets are doing very little indeed. Look at these equities, basically flat on the day, nothing doing there. You got futures on the US, slight tick lower and very mild move lower on the Asian markets, but to be honest, markets are biding their time in front of this Powell Powell testimony this afternoon, where we're expecting to get more of a guidance as to the next direction of the Federal Reserve and the degree of possible rate cuts that could come further down the line. So that's what the market is procrastinating about, really. It's very much in wait and see mode today. So not a great deal going on in terms of direction, but there is a very slight air of dollar continuation of the recovery. You see that where Treasury yields are actually continuing higher, and that should continue to provide a basis of support to the dollar. Certainly, if in the wake of the Powell testimony this afternoon, if that move continues, I think you can imagine that the dollar is likely to continue to gain ground. You've seen sterling breaking down to multi-year lows. You've seen dollar yen breaking out above 108.80. You've seen euro dollar, which is testing that 111.80 key reaction low. So it's some really important levels, and not only that, you've seen gold, which rebounded back to $1,400 yesterday, again falling over today. So some really there is still a degree of dollar strength which is coming through this market, but to be honest, in front of this Powell meeting, there's a little bit of consolidation to be seen. Now, in terms of data points today, we've got UK GDP at 9:30, expecting to show continuation really of the 1.3% year-on-year level that we saw last month. UK industrial production again expected to come a little bit higher, actually, at 1.5%. There was a terrible month of April, which industrial production fell sharply. So it's expected to rebound in May. But the Bank of Canada is expected to do no change on its monetary policy decision at 3 o'clock. Also, looking out for the crude oil inventories, let me show you what happened on oil, or what has happened on oil this morning. Given the fact that we saw the API inventories higher than expected yesterday, so oil has jumped this morning. The API inventories higher than expected drawdown, bigger than expected drawdown, which was oil supportive. So are we going to get a big drawdown today in the EIA inventories? That is the question that we'll be facing at 3:30 this afternoon UK time. But look at this downtrend. Also got the resistance of the falling 55-day moving average as well. So that's an interesting level that we're seeing on oil. But that's this afternoon. But as I said, Fed Chair Powell's testimony at 3 o'clock will be crucial. So my chart today is the Australian dollar. Now, what we have seen is the US dollar strengthening, and that certainly is weighing across the forex major pairs, and the Aussie dollar is no different. Aussie dollar breaking down below that 69.50 pivot of the past couple of months, but interestingly, this move is coming as, if I zoom out, you can see the importance of this long-term pivot band between 70 big figure, 70.50. Had been a key floor, but has now since then, in the last couple of months, come a key basis resistance and pulling lower from that. You're now sort of finding a new bear trend channel, a bear consolidation channel between 68.30 and 70.50, and falling below that 69.50 level of support in yesterday's session. Decisive move below that really does open up the lows of this range again, 68.30 to 68.60 area. And you can look at the momentum indicators, bear cross on the MACD, acceleration lower from a bear cross on the stochastics, and also the RSI below 50, certainly with downside potential. So I think rallies are a chance to sell on this Aussie dollar. 69.50 is the key basis of overhead supply on a near-term chart. You can see that on the hourly. breaking down, produced a top pattern. You could measure 100 pips actually to the downside. So that gives you 68.50 as a target area. So there is downside potential at this move. You've got the hourly RSI failing under around 50, 55 area now. Our MACD lines seemingly failing under neutral. So all points towards selling into strength. And I think any little intraday rebound that you get on the Australian dollar at the moment is likely to be seen as a chance to sell. So with that in mind, I wish you good luck in your trading today. Subscribe to our videos, and you can also sign up on our website to our weekly trading webinars. So I wish you good luck in your trading, and I'll speak to you later.